Budgets are one of the easiest and best financial tools to help people track their income and expenditures. Once budgeters have that in hand, they can use budgets to help them achieve goals, paying off debt, saving for a future purchase, or making sure their retirement is well prepared for. Budgets are very personal, but they don't have to be complicated. First off, why is budgeting money so difficult? Budgeting is simple, but it can be one of the hardest things to do for a couple of reasons. For starters, most spending these days is done via electronics. Not too many people are carrying around wads of cash or even writing checks. Our electronic purchases without physical evidence of our spending makes budgeting much less tangible. Budgets also require a component of self-discipline that can be rather uncomfortable. It's sometimes difficult to face our own choices, and budgets put all our business on paper for us to review in black and white. There's also an element of thinking that budgeting will be harder than it actually is. The best budgets don't restrict us to the point of failure. Budgets that are going to work long-term make gradual changes over time. Here are a few tips on how to budget your money effectively. Number 1. Get your financial documents and statements. This step might seem like one you could skip because the amount on your paychecks is burned into your brain forever, but don't skip it. Gathering your financial documents is the best way for you to see the whole picture instead of just part of it. For this part, you will want to gather bank statements, credit card statements, recent bills for recurring expenses, and pay stubs at a minimum. If you are making any contributions to investments, grab those documents too. Number 2. Calculate your net income. Net income doesn't mean the amount you agreed to when you started working. It means the amount you make after you pay all your taxes, and for most people, this will be your actual take-home pay at the end of the month because employers deduct your taxes from your check. Self-employed people need to consider for themselves the taxes they need to pay. Number 3. Understand and list your monthly expenses. This is the part of the process where the rubber starts meeting the road. If you spend money in a month, now is the time to list it. This includes the more boring things like mortgage payments, student loans, car payments, but it also includes the fun stuff, like all the runs to Taco Bell at 2 in the morning. You want to make sure that you are accounting for all the dollars spent. Don't forget to list groceries, personal care, entertainment expenses, savings, insurance, and healthcare costs. You don't have to do any adding or any analysis. Basically, if you spend it, you simply write it down. Number 4. Identify any variable and fixed expenses. Identifying variable and fixed expenses is the next piece of this puzzle. Fixed expenses are things that are the same every month. These expenses are usually mortgage payments, rent, car payments, internet services, student loan payments, and subscription services. These will vary from person to person, but you're just looking for the payments you make every month that are reliably the same. Variable expenses are those which change from month to month. Common variable expenses include things like gas for vehicles, groceries, eating out, gifts, and entertainment. Variable expenses are not restricted to these categories, obviously, but are just expenses that are not the same every month. Number 5. Adding up your expenses. For the first time in this process, it's time to break out the calculator. During this step, you need to simply add up your expenditures and record the number in the various categories. Make sure that you account for everything you listed earlier, even if you think you could cut it. This isn't the step for that. Add it all up. Number 6. Subtract expenses from your income. If your palms are getting a little sweaty at this part, you are not alone. This quick calculation will tell you whether you are living within your means or whether you're YOLOing a little too hard. If your expenses are less than your income, you are on the right path. If your expenses are greater than what you're making every month, chances are that you already had a good idea of that fact, and you need to do some refining of your needs versus your wants. At this point, you can cut some things from your spending, like unneeded subscriptions, eating out expenses, entertainment, and such. Once you've discerned needs versus wants, circle back to adding up your expenses and proceed. Number 7. Decide what to do with the money saved. Now that you have an idea of your spending and what discretionary funds leave you each month, the next step is deciding how to allocate it. Some people might want to use excess funds to pay down debt or bulk up savings. This money can also be used for vacations or special gifts. Just as spending habits are personal, these goals are too. Another thing to consider is if you want to use all your leftover money to do one thing or split it up to fund a few different goals. If you have high interest debt, it is probably best to start there. Or if you're flapping on a wing in a prayer with no emergency funds, building up that is a great goal too. Now, with those tips in mind, here's how to use your budget. Budgets are, above all else, tools tools are only as helpful as the person using them. Once you have a firm grasp of the money coming in and going out, your budget is a fluid document that becomes a plan, not just numbers on a piece of paper. Budgets help you spend less than what you make, which is ultimately the foundation to meet any future goals, like emergency savings or paying down debt. A budget can also identify spending habits that could be refined to free up more money for the future. Variable expenses are the expenses that are most likely to balloon without accountability. While $10 here and there on entertainment or eating out might not seem like much, it can add up if you're not keeping track. Budgets are not designed to make you cut out your beloved Chipotle burrito forever, but rather to help you keep track of how many burritos you can eat and stay still on track with your goals. It is also imperative that you leave room for mistakes and surprises. Budgets don't have to be all or nothing. The biggest tip to budgeting success is having a clear goal in mind. Is your goal to better understand your spending? Save for a trip? Have emergency savings? Secure the retirement of your dreams? You're more likely to be successful if your why is bigger than your why not. Hopefully, this has been helpful as you set out to create a budget for yourself. Budgeting provides a plan or way forward based on an individual's income versus expenses. Even if you don't want to get complicated, everyone can benefit from an understanding of their spending habits, and comparing what you're spending to what you're making can provide just that, while also helping you worry less and save more. If you like this video, then make sure to hit the like button, subscribe, and join us every week as we break down personal finance topics in plain English.